Welcome back to CryptoZonZ, peer-to-peer financial empowerment, hashtag love all, serve others. Opportunity. In this video, we'll do zone coverage under Zone 1, Bitcoin, cryptos, and peer-to-peer fintech. And we will specifically mention some opinions I have about the present market within the last several hours or days. And then we'll bring up 5 different individuals: President Trump, Michael Saylor of MicroStrategy, a recent fame, George Ball, a former CEO of Prudential, Warren Buffett, and Paul Tudor Jones, an epic hedge fund manager. But the reason why I'm doing this video is because I just recently came from a gathering. It was a funeral, actually. And so, as it was afterwards, there was a lot of conversation. But a relative of mine, I got into a conversation with. He was a young man. And I just wanted to see what he's doing with his money. I started conversating and asking him questions. He's really doing quite well. I was very encouraged. He is doing a fair amount of day trading, and he's done it all on his own. He said that he bought Facebook at the dip back in March when we had that, 30+% drop, the biggest drop in the shortest amount of time. And since then, he's up, I think he said he was up 20% or more. But I asked him about Bitcoin or cryptos, and he's trading on Robinhood. And I said, hey, you can get that there. But he hasn't bought any of it, and understandably so, because he knows very little about it. He actually made a comment. I asked him, what do you think about that, or why haven't you bought some? And he said, well, because I think it's kind of on its way down now. It's reached the best it's ever going to get. And I was just sobered, I guess. I was surprised and appalled, but with some of the recent events and some of the goings-ons globally, it just reminded me that I have to remind people of some of the things that are going on in the world in a macro view, and encourage them to consider or reconsider what they think about their billfold, or their pocket, their portfolio. But I'll mention some of the things like, okay, President Trump, at last June or last summer, he mentioned, I don't like Bitcoin, whose value is based on thin air, and it has no value. I'm totally paraphrasing, but just the fact that for the first time in history, a president of the U.S. is mentioning that word in a tweet, it really means that it does have value. And the reason why it does is just because it has had so much discussion after 11 years of being in existence, and there's a lot of movements going on towards that niche, or that innovation, towards that market, towards that economy. And albeit it's still not big boy pants in the sense of what's going on globally. Bitcoin itself is over 200 billion in market cap in the entire global market, and Bitcoin and cryptos I haven't looked at it quite recently. I'm guessing it's about 300 billion, maybe 280. But that's really nothing compared to the trillions and upon trillions and hundreds of trillions that's being traded globally. But one thing that Michael Saylor, well, let me wait on that comment having to do with Bitcoin. But actually, I'll go right into Saylor. He's one of the 5. But Michael Saylor recently gained quite a bit of notoriety because his hedge fund MicroStrategy they have had a $500 million in cash sitting on the sidelines. And what they decided to do, after some very deep dive in data and research on it, which I applaud them for, they came out with an announcement and a statement, and they said, well, because of these 7 reasons, that they are going to, their initial investment was 250 million of real Bitcoins. And then shortly thereafter, they invested another 175 million, which means a total investment of 425 million. And they essentially made their fund's strategic reserve currency as Bitcoin. And then they took a survey of their investors, and they largely agreed with it, or largely liked what they have done. And the reason why this is so epic is that this comes on the heels of, like, I.C.E, Intercontinental Exchange, who are the owners of the New York Stock Exchange. They got approval, and they launched a derivatives trading, or a futures trading, having to do with Bitcoin. That was last year. But these are no small beans that are going on. There's a lot more advanced regulation that is taking place, which just means that there's more approval within the largest economy on earth, within the U.S. There's more reason for hedge funds and big financial and economic players to consider Bitcoin, and they surely are doing that. But once these hedge funds start to get in and using it, I think that really is kind of a tipping point. All the way up to that point, there's been kind of a more reservation, but now there's a lot less reservation. But Michael Saylor, in what he did was, in getting that many Bitcoins, he essentially used OTC desks, which, well, presumably he did. He did make a tweet detailing a little bit of how he achieved that, but the way that he went about it did not affect the Bitcoin price. As you can imagine, if someone drops down $250 million or 400 million in Bitcoin all at once, it could really jack the price way up pretty quick. But he avoided doing that in the way that he did. He did it in thousands of tranches around the clock for, I don't know, 12 or 13 days or something like that. But in some of the research that he had done, a big reason why he decided to go with Bitcoin is just the fact that it really does present a very, very good use case for storage of gold. And so many people are just comparing it to gold, but he noted that it's like 100 times better than gold as far as storing. I mean, it doesn't weigh anything as compared to, traveling across borders with it, or it costs like zero to secure practically compared to armored trucks and things of that nature. But mentioning President Trump, well, I mentioned him already, but just the value that it really does have. Kind of related to that is the comments that Warren Buffett had about it a couple of years ago. He called it rat poison squared, and he said that it has no intrinsic value, and that well, the other comment I want to make about Buffett is that he recently has begun to buy gold, which it's the first time he's been doing that, and he also sold a lot of interest in banks. But as far as Bitcoin having intrinsic value, I could see why Buffett would say that, and he would talk against Bitcoin because he's old school, traditional finance. He's analog, if you will, and not knowing much or experienced much or liking much having to do with digital, apparently. And so, in other words, many or most of his investments are in a traditional finance world, which is juxtaposed to the competition that is presented by a new economy. So, of course, he's going to talk against it. Take a person like George Ball, former CEO of Prudential, which is a 1.6 trillion with a T dollar corporation, and he made good comments about Bitcoin as far as looks like it's a good thing to be thinking about for the near future because it looks like it's going to be ascending in value. Also, Paul Tudor Jones, who has, I think, the second or third largest hedge fund. He's got like over 40 billion in assets under management. And back in March or April of 2020, he said that he's going to put 1% to 2% of his reserves or his holdings into Bitcoin. He actually did not do that. He did that into Bitcoin derivatives, which is, associated with the Bitcoin market, but they're not actual Bitcoins like Michael Saylor did. But just because he is such an epic and iconic figure on Lower Manhattan on Wall Street, it bodes very, very well for other people to consider it. And when you couple all of these things with just some of the things that we're aware of, like recently the U.S. Fed now they're required by the federal government, the banks do not have to have anything in their reserves. They are now not a fractional reserve banking system. They don't even require any reserves to put out loans now. First time in history, and very, very few people know about that. And it's certainly intended to create more money out into the market, which will create more debt and create more dollars on ledgers and serve to minimize the purchasing power or lower the purchasing power of dollars. And what people will do and have been doing is flying into gold. Gold has reached all-time historical highs. And when gold goes up, what that means is that dollar values go down. In other words, if you're going to purchase a house for $1 million, then if it was $1 million last year, you're going to need a lot more dollars to purchase it because the value of the dollars is going down. So you need more of them to purchase that same $1 million house. And that's the reason why real estate prices have been continuing to uptrend. But just a good kind of a metric to make sure, it's a simple one, but to make sure that we're aware of when gold prices go up, that means generally that dollar prices go down. They are offering, well, the Feds are at about a 0% interest rate, and we know that that's at historical lows. Again, that is intended to create more flow or currency or dollar velocity in the global system to keep propping up prices in Wall Street. It's not necessarily hard money that's propping that up. Let's see. Also, bank fraud. Just in the last couple of days, we've seen news reports of over 1,000 leaked documents by an international journalistic cooperative. It's a 4-letter organization, but they have shown over $2 trillion worth of money laundering from 1999 to 2017 by 5 main banks. There's many others involved, but they were able to show documents that really show that. As we continue to fact check, we'll get more solidity or substantiation from that. But right now it looks like Deutsche Bank has 1.3 trillion as criminal activity, possibly, and also J.P. Morgan had like a half a trillion, and then HSBC, New York Mellon, and Standard Chartered Bank are all involved in the estimation of about 2 trillion. And when we look back at even like September 10, 2001, Donald Rumsfeld announced 2.3 trillion. This was 20 years ago almost. That was, way before Bitcoin, but they said, oh, we've lost it. Can't account for it. And the very next day was a historic tragedy, and no one talks about the 2.3 trillion that was lost now anymore. But in Bitcoin, another reason that I just want to remind people of what's really going on, it's, let's not be ignorant, because not that I'm saying you should put all your eggs in one basket in Bitcoin and cryptos, but it certainly presents the greatest financial innovation in the history of mankind. And primarily the reason why that is true is because it provides a alternative source, an option for financial freedom, and a very separate economy as an option for people to create value in. Number two, people who are involved in Bitcoin are speculators or people primarily in it for profit, which, how can you bet against that? Or how can you say, there's some very good things about that, especially when someone intends to donate a lot of that. Like in the traditional world, Buffett has pledged 99% of his income to charity while he's alive. But so primarily people in Bitcoin, or initially there are people in it philosophically, secondarily for profit, and thirdly for survival. Those are 3 incredible reasons that bode well for its continued success, and especially because recently in the DeFi industry, the decentralized finance industry, since July, there's been a 10x increase in the amount of money that is being invested into that sector. And the reason why is because mainly it provides a way for people to stake their coins or stake their money and get a reward for it, minimum of 8%, 20%, 100%, and even as much as 1,000% A.P.R, yes. And the way that they are able to get that kind of return just for holding their money is because they provide a liquidity pool, which enables the transactions of a lot of trading to be taking place. It collateralizes that market, and so they're being rewarded greatly, which what is called market making or yield farming, or providing liquidity pools or staking. So it's just, 10 billion is a pittance compared to what is going on in the banking industry globally, of course. But this is just the tip of the iceberg. Because of some of the innovations that are going on there's a great throng of other innovations that are going on. Probably the most important one would be Ethereum 2.0 that is yet to be launched or advanced. And then, there's all kinds of innovations with decentralized trading platforms, exchanges, and as I mentioned, the staking and yield farming and market. It just goes on and on and on. So, and these are because this innovation is simple. It's simplistic, I should say. It's not simple, but it's very much catching on with people all over the world who have been craving for and thirsting for some kind of a independent economy. It's the first time, this represents the first time in global history that there can be the potential of a brand new economy that's separate from any nation state or separate from any borders, and without a bullet shot or without a shot fired. It's an incredibly peaceful technology. In that sense, it's very, very powerful. But I could continue to go on and on, but please check out the playlist there for other thought-provoking articles. Please like and subscribe and click the notifier bell. That way you can help advance some of this information to others. I super appreciate that. Click on the green planet there. Appreciate that. I wish you well, I wish you wealth, and I wish you health. And until next time, peace.